We're going to be talking about what you're doing at Chaucer, and really interested to know around what you're doing about innovation. I often describe you and use you as an example of one of the companies that are doing the most in this place. Duncan, you are Chief Strategy Officer, which makes you responsible for strategy, corporate development, marketing, distribution, and innovation at Chaucer. It's a lot of jobs. And Hayley, you're Head of Innovation with responsibility for driving and delivering Chaucer's innovation agenda across the group. So Chaucer, you're a leading specialty insurance group, providing support around the world, partly through Lloyd's, partly through the company market, based in London, but you've got about 500 people worldwide. Really interested to see that actually of those, 120 are underwriters. So it's a kind of good ratio of underwriting to everyone else. Syndicate 1084 is what you're writing through Lloyd's, where you've got a capacity of 1.5 million, of which there's about 1.8 in US dollars, I think. And then you've put you in one of the top 10 insurers in Lloyd's. I see, founded back in 1922, and you're offering insurance and reinsurance across a whole wide range of classes around the world. Is there a kind of cohort or a peer of other people in strategy across the London market that you know about and work with?
We collaborate increasingly with like-minded peers across the market. I think strategy as a discipline within insurance, it means different things to different people. Most of the 500 employees at Chaucer, their focus is more around delivering on the short term. So our challenge is around encouraging a little more focus on the long term in order to do that. So strategy is central to looking at that future.
So I actually sit within the strategy team. And I think that, the way we call out innovation, we do it more, I think, as an external feature to the market so they know who to come into. But ultimately, we think of innovation as merely a tool of strategy.
Can you just explain a bit more what that means when you talk about innovation from the outside?
So people outside of Chaucer know who to go to, know who to contact with an idea, with an opportunity, with something to discuss. They know who to collaborate with. They know who's the kind of the point person at Chaucer with whom you can connect that can take something or do something with whatever it is you're bringing.
Now I want to come back to the innovation areas. So first of all, if we look at the established business, what opportunities are you seeing?
What it took to be successful now and 10 years ago is definitely not what it will take to be successful going forward. So what are the products that we need to deliver? What are the services that we need to provide? What are the problems that we need to solve are increasingly different. And therefore, innovation and innovative thought and an innovative approach is really what it's about to our core lines. And the truth is we need to be clear as to what that means going forward. What does it take to be top three?
I think what's important to include onto what Duncan was saying before is that we're successful today. You mentioned that we're a successful company. We're a top 10 in terms of size. We're one of the top and always in the top quartile in terms of Lloyd's performance. But we're successful today because of what we did yesterday. And therefore, we need to understand that fundamentally that there's not really anything to improve because nothing is fundamentally wrong. But we need to acknowledge that what got us here won't get us there. And therefore, we need to set up thoughtful, contained experiments that are incredibly focused, that test strategic hypotheses across multiple time horizons.
There's different areas that innovation can be applied to organizations. I know one of the areas you're looking at is in some of the more established business lines. Are there some examples you've got around what you're doing?
I think a good example might be terrorism and political violence, which is a class of business that Chaucer have been very successful in over a long period of time. We are one of the preeminent market participants in that class. It's also a class that attracts a lot of our competitors, and it is a class. It's one of the more commoditized, if that's the right word, classes in our world, and therefore it's easy for competitors to come in. It's a class that can be profitable, and therefore, in order to stay ahead, we have to continue to think about our product and think about the distribution.
If I was buying political violence coverage, what am I actually being covered for?
You're being covered for the financial loss arising from damage to your property arising out of an explosion or civil insurrection.
Some examples of some innovation that we've done in that space, though, would be our partnership with Complex. Some years ago, where we tried to apply the parametric as a tool in order to pay small businesses following a terrorism event, like Duncan said. And I think more recently, when COVID hit, we had a hypothesis that this could be the event that syndicates the pandemic market in a similar way that 9/11 sort of syndicated the political violence market. And so we actually launched a pandemic parametric product in Canada.
What were the lessons for you in Chaucer that you had, both, I guess, in terms of like the idea of using experiments and then anything that you feed back into what you're doing more broadly around innovation?
I think the number one lesson we've learned is probably quite obvious, and that's the need to be working directly with customers when we build the product, and that we can't just build a generic product and try and sell it to anyone. We have to work with very, very specific people on very, very specific problems. And that's where we get the greatest traction and the greatest sales, really. And I think where we don't, that's where we see products be unsuccessful. So if we just say, okay, we're going to sell a parametric terrorism product, it's probably not going to do as well as if we say, okay, well, we're going to sell a lockdown specific cover for mid-sized hospitality venues within Canada.
And then just given the Lloyd's market is entirely intermediary or broker driven, when you're talking about learning from your customers, how does that dynamic work?
So we work with brokers, we work with cover holders, we work with partners who understand the importance of having direct customer engagement. For example, when we built the Gaia product with Beasley, we had a group of 32 customers that were constantly feeding into the product designs.
And let's talk about Gaia, because that has been successful for a number of reasons. It's basically insurance protection for people going through IVF treatment who essentially the treatment is not successful.
I think what we as an industry have gotten better at doing, and perhaps even as a planet, is realizing that we can't do everything ourselves. We're really good at insurance, and we're good at it because we have a lot of experience doing it. And to be honest, we really love it. But what we're not that good at is we're not that good at understanding markets and understanding customers, because we are a few links away from the customer. So what we look for in a partner is true market understanding and true customer understanding, and indeed dialogue and communication. And when I say a customer, they don't have to be a paying customer as of yet. It's just someone who would potentially buy this product in the future if it's not yet available. And I think with Gaia, why it was so successful is because the team at Gaia are second to none. They're experts, passionate experts within their space, and they bring customers. And so they bring that market and they bring that customer knowledge. And why it's been successful is because we built a very specific product for a very specific need. And it didn't exist before.
I think what's interesting for me over the last 10, 20 years is how that dynamic has shifted subtly in terms of the nature of the relationship between underwriters and brokers and customers, and indeed other entities, sort of hybrid versions of underwriters and brokers. And I think that's been important in terms of creating products that are more in service of what the customer is looking to do.
And how do you encourage your underwriters to give the time that's required for some early stage businesses that are probably not going to drive a lot of difference on their revenue initially?
I think that the very best people in all industries crave change, want change, drive change. And innovation is just change. The top underwriters, the top anyone, will always be striving for change, always trying to push the limits of what is possible. And the only thing that's really changed is that we created this innovation function. But really, I think all that structured innovation does is help you get the most bang for your buck, because innovation will happen organically anyway. But you're gonna get the most return for it if you actually invest in a function, if you build the infrastructure.
That there is always that tension, or maybe challenge is a better word, to continue to remind people there is a real latent appetite, a real latent desire across the company to be creative, to be enterprising, to be innovative.
So climate's obviously very big on the agenda for lots of reasons. You're working with Kita that are offering a very interesting product to provide protection for carbon credits.
Within our innovation, these future profit pools that we talk about, what got us here won't get us there. We think that there are 5 major areas that could be big. So that's weather, climate change, intangibles, truly new markets, and parametrics as a tool. And so naturally, we are always on the hunt for interesting companies doing new and different things within these spaces. So For us, climate change, we think that there is a tremendous amount of risk that is associated with climate change, but there's also an immaculate amount of opportunity that is coming out of this global trend. So when we found Kita, we immediately liked what they're doing because they're really trying to enable the carbon market. So they're trying to be the world's first dedicated carbon insurer. And that market it's quite a nascent market. It struggles with efficiency given that it is so young. And so I think fundamentally what Kita are trying to do are to unlock trapped capital.
Hayley, you mentioned trapped capital in there. For those that don't understand what that is, which includes me actually, can you explain it?
So the trapped capital would be that people don't want to buy these because there's an inherent amount of risk, so they're not able to. So there's trapped capital, so people have to invest quite a lot early on. So there's initial capital that's getting trapped, and then there's also buyers who are buying these, and then their capital is trapped for multiple years. Whereas if they could buy an insurance product, it would free up capital for them to invest in others. Again, reminder, the purpose of innovation is to test future profit pools because what got us here won't get us there. Always, that's our mantra. And I guess we think about it across Horizon 1, which is kind of this developing our existing lines and working with our existing lines on setting up experiments to really push the boundaries. That would be sort of the pandemic parametric product or, the complex that we mentioned before on the political violence side. But then we also build out experiments for Horizon 2 and Horizon 3. We call this internally sowing seeds. And this is really exactly what it says on the tin, right?
And can you give some examples that would have been successful for you in the last couple of years?
Yeah, absolutely. So I'd say Kita, who we just launched sort of in January, they're within the climate change space. Gaia, we would call a truly new market. That IVF, sort of really IVF warranty market, we think is quite new. K2 parametric, very much obviously within the parametric space. So that's a parametric NatCat product. Crown Jewel, which is a cover holder we just launched in the last few weeks, and that's trade secret insurance.
Okay, well, trade secrets insurance is something we don't hear about very often. Can you just explain a little bit more about how that works in practice?
Within the intellectual property market, you have two main types of assets. You have sort of registered assets, which is really what I think a lot of people think about when they think about intangibles or intellectual property. And that's patents, trademarks, copyrights. And then there's secret stuff. There's stuff that you don't tell other people about, and you can't patent because patents have a shelf life, because they take a long time to get, and because by their nature, they're public. And so they therefore invite copycats. Things like the recipe for Coke or the recipe for WD-40. These would be examples of trade secrets. And historically, there has been no cover for these.
The oft quoted statistic that 90% of balance sheets these days is intangible assets rather than tangible assets. And the assertion that insurance typically addresses physical assets, tangible assets, and not intangible assets. So we've done quite a lot of work looking into that.
You've been doing a lot around ESG, and I know you're very focused around measuring. Can you just talk about how are you doing that and why are you doing it?
I think that macro factors in the last few years, just as with anyone, have really forced us to shift from an ESG approach that might be sort of implicit, so implicitly built into our culture. We hire good people, we run our business in an ethical way, to explicit.
You're doing some work with Moody's to create a balanced scorecard. Can you explain how that works?
We pulled together this, we call it the balanced scorecard. So it's 158 data points across the E, the S, and the G. These range anything from greenhouse gas emissions to diversity and inclusion policies at organizations, right? And then we needed someone to sort of power this scorecard because we don't have all of these data points across all of our partners, across underwriting, investments, operations. So we scoured the market and we found Moody's to be the first in class and the best in class, if you will. The amount of investment they've made into the ESG space in terms of acquisitions and tools they've built and resources that they've acquired, I think is second to none.
One of the things I found really interesting about what you're doing is you're really keen to work with all sorts of companies, but one of the categories of companies is organizations that have established a presence outside of insurance.
I'd just say that we're agnostic if you come from insurance or you don't come from insurance. The main sort of 4 triage criteria we have are within the market that you're in, could it be big? It doesn't have to be big now, but could it be big? The people, do they bring enough market and expertise and customer knowledge in terms of the customer problem that we think we can build something with? Do they have direct access with a customer, either someone paying for their product or service now, or someone who potentially would want to? And is it strategically aligned?
More broadly, so Duncan, if you are reporting back into your colleagues, the executives, about how you're measuring success, how does the organization assess what's happening? Because some of these initiatives are actually longer than the typical 12-month business cycle.
Classically, in our world, the key metrics are 1 year, it's 1 year premium and 1 year result. Clearly, the value from these experiments and these relationships that we're building is not about 1 year, and it's certainly not about 1 year premium. That's well recognized now across the business, because where we're working with our core lines and enhancing that will have a steady incremental enhancement to the short-term premium. But Keter and Crown Jewel and Gaia and the like, and these other experiments will have a longer payback period.
And then we haven't talked much about investment. It's kind of been in the background. But how do you think about innovation investment?
We're not a VC. We're not trying to be, nor will we ever be a VC. We have an underwriting-led approach to investment in innovation. And we do it for three main reasons. We do it to share in the upside, because premiums tend to be a long way down the track, and the first dollar of capacity is worth more than the 100th. We do it to value our intellectual property that we pour into these relationships. So we work quite closely with all of our partners to make sure that we're bringing the best of Chaucer, which means a lot of our intellectual property does end up in these products and services. And then three, to defend our long-term position.
And how early would you typically invest?
Fairly early, so seed, pre-seed, or sort of Series A, but that would really be the end.
And then finally, we're delighted to have you as one of our members of InsTech. We'd love to hear from one of you why you made that decision.
Absolutely. I think what you guys do better than so many others is you bring together a community and a network of people truly trying to change the world, not just the insurance landscape.